£40,000. That's roughly how much a UK bank can ask you to explain before it lets a transaction through, and most people have no idea why. If you've got savings, you're planning to sell a car, or you're about to move a lump sum for a house deposit or an inheritance, you need to understand how banks actually make these decisions in 2026. Not the scary version, the real one. I've spent time digging through the actual regulations, the Proceeds of Crime Act, the money laundering regulations, and the payment systems regulators' fraud rules, because there's a lot of misleading content out there telling pensioners that certain magic words will freeze their account. That's mostly not how it works, and believing it can actually make you more anxious and more vulnerable, not less. So let's walk through what banks are actually required to do, why they ask the questions they ask, and how to have a completely normal, stress-free conversation with your bank about a large transaction. Here's the first thing to understand. UK banks do have a legal duty under the Proceeds of Crime Act 2002 to report transactions they genuinely suspect are linked to crime. That's real, but suspicion isn't triggered by a single word or phrase. It's built from a pattern, the transaction, your account history, and the context you give them. A bank teller isn't running your sentences through some universal blacklist. They're using judgment, training, and internal risk systems that look at behavior over time, not scripted phrases. That's the first myth to drop. There is no secret list of words that instantly freezes your account. If a teller asks where a large cash deposit came from, that's not a trap. It's a routine step called customer due diligence. And it applies to everyone, not just people who say the wrong thing. The second thing to understand is why banks ask at all. Since October 2024, under the payment systems regulators' new rules, banks can be held financially liable if a customer is scammed and the bank didn't do enough to catch it. That's why banks now ask more questions about transfers, especially anything involving a new payee, an online seller, or an overseas account. This isn't the bank being nosy. It's the bank being legally required to protect you. Because if you're scammed and they didn't ask enough questions, they may have to refund you and they know it. So when a teller asks, "What's this transfer for?" they're not hunting for a reason to block you. They're often trying to protect your money and increasingly protect themselves too. Answering honestly and briefly is normal, easy, and doesn't put you at any risk. If it's a gift to your grandson, say that. If it's payment for a car, say that. There's no hidden penalty for a plain, true answer. Let's talk about cash specifically, since this is where a lot of anxiety comes from. Unlike the US, the UK has no single fixed reporting threshold like the $10,000 rule. Banks set their own internal limits, often somewhere between £5,000 and £10,000 for cash, without notice. Mainly for practical reasons like how much cash a branch physically holds, not because of some secret compliance trigger. If you're depositing or withdrawing a large amount, the sensible thing to do is actually call ahead. Branches often need advance notice simply to have that much cash on hand. That's not a loophole, it's just how cash logistics work. Here's a useful, true fact that never gets mentioned in the scary versions of this topic. Deliberately splitting a transaction to dodge internal reporting limits, something called structuring, can be treated as suspicious. Genuinely, deliberately trying to evade the system is the issue. Not simply making two separate deposits for two separate reasons on two separate days, which people do all the time for completely mundane reasons. Now let's get to the part that actually matters for anyone over 60 specifically. Because there is a real, well-intentioned reason. Banks pay closer attention to older customers' large transactions, and it's not because they think older people are careless. It's because banks have data showing that certain scam types disproportionately target older account holders. Romance scams, fake tech support calls, your bank called you scams, and cryptocurrency investment fraud. If you mention any of those specific situations, a bank may reasonably ask more questions or pause a transfer not to control you, but because those exact scenarios cause real measurable losses every year. And banks are trying to catch them before the money's gone. If you are doing something completely unrelated to a scam, say, sending money to a family member abroad or investing in something you've researched carefully, the honest answer is still the right one. Say what it actually is. If a bank pauses a transaction to ask a follow-up question, that's usually resolved with a short conversation, not an account freeze. Genuine freezes over legitimate transactions are rare, and when they happen, they're almost always resolved by providing basic supporting information, proof of a sale, an invoice, a letter, not by using or avoiding specific words. So here's the practical version of all this, the version that actually helps rather than frightens you. If you're moving a large amount of money, call your bank in advance, especially for cash. Be ready to explain simply and honestly what it's for. A house move, a gift, an inheritance, a purchase. If they ask follow-up questions, answer them plainly. It's not a test, and there's no penalty for a truthful, ordinary answer. And if you're ever unsure whether a call or message asking you to move money is genuine from someone claiming to be your bank, HMRC, or even a relative hang up and call the organization back directly using a number you already trust, not one given to you in that call or message, that last point is genuinely the most useful piece of protection anyone can give you, because the real threat in 2026 isn't your bank misreading an innocent sentence. It's scammers impersonating your bank, HMRC, or a family member to create urgency and get you to move money quickly. So to recap, there's no secret list of banned phrases. Banks ask questions because of real legal duties designed to protect you and your money, not to trap you. Being honest, specific, and unhurried is the safest way to deal with any bank conversation. And the real risk to watch for isn't what you say to your bank. It's unexpected calls or messages asking you to move money urgently. If this helped clear up some of the confusion out there, share it with someone who might have seen one of the scarier versions of this topic. It could save them a genuinely stressful moment for no reason. And if you want more of these straight, no-drama explainers on how banking and pension rules actually work, subscribe. Because there's a lot of misleading content out there, and it's worth having a clear, accurate source. Stay careful, stay informed, and don't let fear do the thinking for you.